election of the House. So you can read more about that if you're interested. I enjoy that kind of stuff. One of the other things I enjoy, and one of my guilty pleasures, everybody has guilty pleasures. Mine is rather benign, in addition to fishing, is I like to look at the consequences of Armageddonism, which is the media tends to flock to people who have the most horrifyingly, terrifyingly calamitous things to say. Now, there's been a lot of books written on behavioral human instinct towards bad news rather than good news, and a bunch of newspapers and magazines have historically conducted experiments where all they do is put good news on the cover, and their newsstand sales go down by 2/3. So the media loves quoting a bunch of these people, and we show the names in the chart, and you'll probably recognize a bunch of these doomsayers. And so we looked at the end of 2019. We looked at their forecast and we said, well, what if on the day of their prediction of disaster, we switched $1 from stocks into bonds by taking $1 from the S&P 500 and moving it to the Barclays aggregate? And by the end of 2019, you would have lost somewhere between 30 and 60% by listening to these statements, which were made between, let's say, 2010 and 2016. So COVID hits. This is amazing. COVID hits. The market collapses, and now the Armageddonists think, okay, I've been bailed out by a global pandemic, which I didn't predict. And so then, after the markets had already declined, by 20, 30%, they doubled down with some of these hilarious quotes about, this is going to be the worst bear market in my lifetime. This is a deep depression. I expect the S&P to lose 2/3 of its value over the coming years. And then, so we have a chart in here where we plot these, where we plot the timing of these statements against what happened in the market, which of course has almost doubled since a lot of these statements were made. This is all fun and games, but it's a reminder that the timing of investing is important. There can be deep corrections in markets for different reasons, but usually the worst time to double down on them is after the market's already gone down. Now, one place where Armageddon is happening is if you're an investor in Chinese equities, which has, over the last couple of years, been quite the train wreck.
Idea is to get out of the U.S. dollar, to get out of a currency that is on the verge of collapse. Because the people who don't get out, that think they're playing it safe, that don't want to take any risk, so they keep their money in the dollar, they are going to be broke. They're going to be completely broke, and that is obvious. It's obvious to me that that's what's going to happen. And this is pure inflation, Latin American style. This is hyperinflation. This is Zimbabwe. This is the identical monetary policy. This is what the Weimar Republic did, and we're going to have the same result. And I am 100% convinced that anybody who has their wealth in U.S. dollars will be just as broke as the people who have their money with Madoff. It's not going to matter. It is going to be destroyed.
terms of getting back as an investor, if it's coming down to here, almost irrespective of what's going on, I have to believe, if I have to make a call in advance, and of course I can change depending upon what happens, but I have to believe this is where you want to start doing that 18, 17, around there. Their earnings report is a complete game changer, at least for quite a while. Bottom line, NVIDIA now is going to enter the realm of Tesla, Apple, and all these other big, I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works. I mean, listen, NVIDIA can come down to 150, come down to $100. If you don't think it's possible, then you don't understand how the market works.